Hello guys, welcome to another episode of Trading Volatility Indices with me. This is episode 5. For a while now, I've not recorded any videos because as at last time I was recording the videos, I got sick, I got a bit under the weather, and then I got caught up with the other activities that I was involved in and all of that sha. So I'm meant to have recorded 2 episodes over the weekend, but apologies that I'm just recording this today. And if you live in Nigeria at this moment, you know that the national grid has collapsed like 50 times in the past few months. In the past 1 week. Yeah, and I could have waited for the light to be restored, let everything get back in order, because I can't spend money on fuel. I don't even have a gen, right, as at this time, because the area where I stay, the light is so good that I didn't need a gen. For the past 2 years, I've never needed a gen, so I could have waited for everything to be back before I recorded another video, but I just needed to put this out as soon as possible. So bear with me tonight if you hear some background noises, if it's not if the ambience is not as you want it to be. It keeps getting better, but I just needed to record this today. So I think I want to do a quick breakdown of some trades that I took in the past few weeks. Now there's a setup playing beautifully, very beautifully on Volatility 25-1S. Very beautiful setup that is playing out. And if you watched my last video, I spoke about my strategy, the general strategy that I use, and maybe if that's what you want to trade, you can trade it. And I don't know if I spoke about mentorship in my last video. I don't think I did, but if you're in my WhatsApp channel, there I've been talking about my mentorship. So if you want me to mentor you, you can send me a DM. Okay, you can join my WhatsApp channel also. I think I'll put the link in the description. Yes, so majorly in the past few weeks we've been turning $1, $2, $3, $5 deposits into $50, $60, $100, just trying to build up that consistency and all of that, because that is what really matters. Okay, so let's do a quick breakdown of this trade of Volatility 51S. Right now Volatility 51S is printing a very, very sweet setup for me, guys. It's printing a very, very sweet setup for me. So let me go to my 5-minute time frame. So on 5-minute time frame, I need to get a bigger screen, guys. Okay, so over the weekend, Saturday-ish, Sunday, the market started falling around here, and I couldn't find an entry. So I basically watched it fall all the way down here. And I had 2 POIs. I had this POI here, this large POI. I had this fair value gap, and on Sunday when I was in church, after church, before you think I'm a bad boy, and I'm checking charts in the presence of God rather. After church, I just saw a rejection around this zone, and when I checked the zone very properly, I found out that it was reacting to a demand before this break of structure. It was reacting to a demand before the break of structure. So I got in that trade, and basically I was able to take that trade from that particular point down to where it is now. So I entered this trade with just $1.5, and my TP was the external high on the 4-hour time frame. My TP was the external high on the 4-hour time frame, and this is that external high. Okay, I marked this as liquidity, I marked this also as liquidity, blah blah blah. So, and from here, from the point where I entered this trade yesterday, if it goes to hit my TP here, that's $120 in profit, cool profit. So I'm basically taking a $1.5 account to $120. But okay, in other words, ideally I should have made $120 from this trade. You know how it goes, right? But we are humans, and expectations differ from reality. Okay, expectations differ from reality. So I was in this trade, and as I was seeing these bull momentum candles, I was happy. You know, I was really happy seeing the momentum candles. But this retracement, this area of consolidation rather, it started to happen over the midnight. Okay, over the midnight into this morning. So I was basically agog, awake. I was tensed. So I think I found out that when I'm in trades overnight, I can't get a good night's rest. I think I found that now, and I need to work on that, because yesterday I got home very late. I got home around 10. I was tired because I've been out since daybreak, and I could not even sleep. You know, I wake up in every 15 minutes, check my chart, what's going on, has it might take profit, is it moving, blah blah blah. So I didn't have a restful night, and I had to go to work today. Yes, I work. I have a supporting 9-to-5 job, but this is my main hustle. I have a supporting 9-to-5 job. So, and I wasn't really feeling good. So I think that's one of the things I need to work on. You know, leaving my trades to run so that I can sleep. Because I can't say I will not take trades when I see set up in the night. No, I can't. I'm not at that level yet. The derivative market offers entries every day 24/7, you know. And so basically for the whole of today, the market was consolidating around it. It will go up, it will come down, play with my emotions. It played with my emotions a lot. And let's go to the 15 minutes time frame so that I can just show you the proper breakdown of this trade. So when I began to see this break to the downside, you know, I began to see a lot of bull candles, bearish candles. I saw it when I saw it break below this area of consolidation. I was agitated, I was tensed. I feared that the retracement was going to be deep, you know, and I tried to take some of my profit. So I took profit at $46. Mind you, from year to year, around $46. Not that bad, you know. Once again, expectations versus reality. When we are trading, we expect to catch a move from the beginning of the trend till the end of the trend, but most times it's never like that. Okay, it's never like that. It doesn't play out the way we want. So if the market had come back to this high where the consolidation started from, that would have been $60 in profit, kind of. But I took my profit at $49, let's say $50, you know. Why I could have been jittery because of $10. At the end of the day, I didn't lose. I still made money. You get what I'm saying, right? So if I didn't make money at all, who was I going to hold responsible? You get what I'm saying, right? So half profit is better than I took profit as $46, and I tried to sleep. That was around 5 p.m. or so. Then when I woke up, I saw that okay before I slept, I saw that market had found support here, and it has started rallying. So I decided to enter at 1 or 2 times, but I found out that I was getting stopped out. I think I entered like twice and I got stopped out. Then I entered again, and this trade began to rally. Okay, and I think from here down to here, down to this point, I'm in about $20 in profits. Okay, so I've taken a $1 to a $20 account. Okay, so if it goes ahead to hit this TP, that will be $60 from my original entry. 60 plus 50, that's $110 from just a $1.5 account. Okay, I hope there will be no further retracement and the trade will go to it for that TP, but yes, that's what I hope. But let's see how this beautiful trade is going to play out. So I think in my next video I'll talk more about psychology, because market structure is really not hard. It's really not hard once you have a system that has an edge. Okay, the system can be SMC, it can be trend line, it can be demand and supply, support and resistance, blah blah blah. Just have an edge. Okay, but you find out that in most times when you have an edge, what will keep you from being profitable is nothing other than psychology. So we'll dedicate another video to talk about psychology. So let's look at another trade that I'm in right now. I think I found a beautiful entry on 25-1S. Yeah, I think I found a beautiful entry on 25-1S. So I marked out this break of structure. I think this was a sweep of liquidity. Like I told you, the strategy I trade is SMC, smart money concept. This was a sweep of liquidity to the downside. The market began to rally. This is an equal high. Market took out that equal high and started falling from this place when it found another equal high. So on that Saturday night, I marked, because I took the analysis for both this and 51S at the same time. I marked this place as my POI. This setup that is starting to play out now, that was where I marked as my POI. But right from here, I found that the market has started to react and the market was falling very beautifully. So should I go in, should I not go in? I tried to go in, but I got stopped out, and it was in the midnight, and this, I don't know the thing with midnight trade. So I decided to go and sleep, and when I woke up, I found out that market had rallied from here to around this place. That was like $40 on the lowest loss size. I was quite pissed, you know, and he even did not really take profit for this. Okay, now so when I saw this impulsive candle that took out two previous bearish candle, I knew that this was an opportunity to get back into the market. This was an opportunity to get back into the market, because from your understanding of candlesticks, you can read the momentum of the market by analyzing candlesticks, by looking at what the candlesticks are saying, by looking at where the candlesticks are pointing you to. So when I saw this bullish candle close above to another, we may be ready for a buy. Okay, and I entered that buy, but I was quite busy, and I think it stopped me out. Yes, it stopped me out. So if it didn't stop me out, from my entry down to where it came to, that would be around $50. But we move sharp, we really move. So market has come back into my POI here again, and I'm in this trade again, and I'm watching to see it play out. Okay, so if it goes from where it is right now down, I think that's about $95 in profit. So I'm waiting to see how that will play out. Okay, so guys, I think I think I've tried for this video. So I'll do another video where we'll talk about psychology in the next video. Thank you very much. Have a nice day.